The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, folks, good afternoon. And I was listening to Basil talk about his indicators that he's watching, and I have to agree with him 100%. We have never been at a more critical time in the stock market since April 15th. It's really amazing, the numbers. The first chart that I've posted into Tiger TV today is the chart of the Dow Jones Industrial Average with the Bradley model overlaid on top of it. As you can see, it was due to top around the anniversary date of the low of the stock market from 1932 in early July, and it certainly has done that. Now we backed off a little bit, but the low that we made Friday was just really an amazing spot because it was a 0.382 retracement of the February low. It was a 0.786 retracement of the low we made just a week or so ago, and it was also 61% of the retracement from April 15th. So all of those are coming together at the same time. And there's just so many things. I'm going to have to go through all of them because it was such an important point here where we are in the market. If we look at the VIX index, that's one of the things that we watch because of our good friend Basil Chapman telling us, how important it is. And as you can see, when you take a look at this, you'll be able to see that the VIX index stopped exactly at the 61% retracement of the high that we made back in February. That was the February high. That's the real critical high in the VIX, which is also the reverse of that, is the real major low in the stock market. We ever go below that, where they're going to turn the lights out at Broad and Wall. I feel very, very strongly about that. Now, we did gap up, but we moved almost 65% from our lows in July in the VIX index. So we've had a heck of a move so far. But we've done this before. We did this in July, we did it in October, and we did it in February. So this is really nothing new. It stopped exactly where it should have. The problem is twofold. One is there's so many of these and so many different things. That's one thing. And the second thing is the Bradley model says that this is only going to be a very short-lived rally if we do, in fact, get a rally. The key to watch here, in my opinion, is to watch to see whether we hold these lows that we made on Friday, because that's the key point where all these numbers came together. The transportation, it hit the exact 786 retracement of the previous, low that we had, going back on, June 10th. And I'll put this one in so you can take a look at it. And so far all of these have held. That tells us that we have a, pretty significant cycle low here. And there's just so many of these. I mean, I think there's 8 of them that I've looked at over the weekend that tells you that's what we're looking at when we're watching these things. We're having the same thing in utilities. The banking index made a perfect Gartley pattern at a 61% retracement on Friday. Stop spot on right where it was supposed to stop. So, those are the ones that tell us that they have to hold these levels. Otherwise, and we should have it. Not only that, should they hold it, but if this is really an important low, it should come out of here, with a lot of gusto. In other words, telling the bulls that, we're still in charge. You might have heard us a little bit for the month of July, but we're still in charge. So this rally that we should get better be very, 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 very strong coming out here, because if we only come out of here really, really slowly, then you're looking at something that's going to be a lot more sinister, which I think is going to be the case. Now, today I happened to notice that Rich McTeer, who was one of the Fed governors a few years ago, he quit about 4 years ago. came on, and of course there was a lot of, as you can imagine, with 12 people and a chairman and a Fed chairman and the assistant chairman with all these bankers together, there's a lot of emotionalism. There's a lot of ego built into this and a lot of power. And Rich, frankly, did not like to go through that stuff, but he's famous for his boiling frog analogy. And that is, if you throw a frog in the water and put him on the stove, by the time he realizes it's boiling, it's too late. And this is what he reiterated today on CNBC because of the fact that we've had a situation where the Fed has done something that they're not going to be able to extricate themselves from that. Now, he's one of the few people that believe that. But on Sunday's program, I always watch CNN to get the State of the Union, State of the Nation with Candy Crowley. And following that, they had Glenn Beck on. He's a very controversial radio announcer. He was on Fox News for quite a while until he made the comment about Obama being a racist, and that cost him his job. But he has his own network now that is bigger than ever. And he's also said that the problem with the country is the Federal Reserve, the fact that they put us into this box that we have no way of getting out. Now, Glenn Beck cited a bunch of historical precedences over this, the fact that anytime anybody's ever tried this in the past, it's always blown up. And he doesn't see any reason for it to be any different this time. Whether that's true or not, I don't know. We just watch the markets and, see what happens. But anyway, these are two people that, think the Fed has done, something that they're going to have a hard time getting out of it. So we'll watch that closely. Now, the other market, so I'm going to go through all of these because I think they're all very important because they hit spot on, where they were supposed to go. We'll look at the utility index next because it stopped at the exact 786 of the number that we were watching. And this is a very minor index, but it's used in the Dow Jones theory, so it's certainly we should watch it. There's no question about that. You never trade it, but you watch to see if there's any divergences. Now, the one that really looks interesting to me is the Russell small cap, and the reason for that is that the Russell had a really nice three drive to a bottom pattern coming into the low that we made on Friday, and we made an ABCD pattern there. It was right at the 786. It's been really perfect since we made the double top up at the 121 level in the IWM, and this is where we've really got to get started out of here on a rally, folks. Otherwise, we've got big problems in River City. This thing will literally start to melt down. Now, the most ominous thing that could happen to the bulls is that we just get a very quiet three-day rally here, say Monday, Tuesday, Wednesday, and then we start going below Monday's low. And if we do that, we should do it with a lot of gusto. And that would be telling us that, we're going down, harder and faster than most people think. I mean, the markets really handled this sell-off, incredibly well. I think it's been like 5% or something like that. It's been rather meager. And as Basil said on his show, these people are accustomed to buying the dips. And that's nothing wrong with that. I mean, they made a lot of money doing that, but there comes a time when the dips become, burps, and that's when you really get into trouble. This is what happened to me during the 74 market, is that, I was buying the dips up through July, and then after July, it was dipsy-doodle to the downside, and they always took it down a lot harder than they let it go up, and the market gave back 50% of its value back in 1974. What we're looking at now, I think, is far, far bigger. I think this is something that's going to go in the history books someday, and they're going to go back and look at this and say, wow, wonder why we didn't see this. But, who knows whether that's going to happen or not. I'm not sure. Now, the major index that I follow the most, that it gives me the best indication of what the stock market is doing, is the New York Stock Exchange Index. And I would like to post in here to our friends at Tiger TV to look at what's happened here, because the New York Stock Exchange Index on Friday stopped exactly at the 61% retracement of the May low, 786% retracement of the May low, and 61% retracement of the April 15th low. Is just slightly lower than that. So we've really done that. Now, what's important here is, if you'll notice in this chart, that we had this really strong support a few weeks ago up at the 61% retracement at 109.11, and the market broke. Now that will become resistance if the market starts to rally back, and that will be equivalent to about a 61% retracement if the market, in fact, starts to rally here. And believe me, it's at the moment of truth, because if we close badly today in the stock market, all of what we're talking about, all these are breaking down, and that's telling us that this is just part of a greater down move that we're getting ready to experience. That's what it looks like from the technical perspective that I'm watching when I look at these charts. But there's so many of these things. I mean, you look at the banking index, utility, New York Stock Exchange index. The NASDAQ stopped exactly at the 786 of the previous low. The German stock market, the DAX, stopped exactly at the 786 of the February low. Of course, that's been very bearish since it hit 10,000, and it's given back 8% of its value. And so we'll see if that's going to be going to look, see what's going to happen here. Someone's asked a question about Priceline. That's a very expensive stock on the NASDAQ. If you'll give me a second here, I'll pull this up and we will see if we can see what Priceline is telling us. I haven't looked at this stock since the last time someone called in, so bear with me here. Only take a second here. This is a stock out of Connecticut. I know that because I have a couple of friends that work there. And this market is actually quite strong today, and it's making a little Gartley pattern on the upside, a bearish Gartley right at about the 786. Hold on, and we'll just but it's got this really wide range bar today, so you have to be really wow, it's moved from 45 to 75. Must have had some kind of a news announcement, but it's at a point where if it's going to stop, it should stop pretty much right where it is right now. But with this move of $30 in a matter of a few hours here, I'd have to respect that long bar. I'd have to wait a day to make sure that this is going to stop it, because if this doesn't stop it, it could go back to the 1340 area, another $70 higher, without any trouble at all. That's the way it looks from the perspective that I'm watching it at. So all I know is today is Friday was a really key day, and we really need to come out of here with a lot of gusto in the stock market, because if we don't, we're going lower. Well, I don't think we are going lower. It's just a question of how much we're going to rally before we go lower. The Bradley model is right, about 70% of the time, and since July, it's been logged on pretty closely to what we think is going to happen, and we don't see any good rallies in here until really late August. Right around the 1st of September, there should be something, so we'll see. There hasn't been a punishing down move yet. I mean, where these people actually have a little bit of fear in their eyes. I mean, even the VIX index has only been able to get to the 61% retracement. Remember, it moved 60% in a matter of a week or so. Okay, we got the Dow about unchanged, and the gold is selling off a little bit. We'll be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks. And one of our listeners asked me, how do we know when margin call selling hits the market? Well, about the best analogy I can give you for that is what the federal, not the Federal Reserve, but our Supreme Court justices talked about when they defined pornography. They said they didn't know what it was, but they knew it when they saw it. So that would be the analogy that I would probably have to say, is that this is what I would be thinking, that we would have to be looking at, something like that. You'll see a big downdraft. I mean, this could have been the start of it. We're at such a critical level in the market right now. We've been up most of the day, which is really good. We need to close strong with a lot of gusto and, get the market moving to let the people know that it's safe to buy again, and then we'll see what happens. But we have such a critical level that hit there yesterday, Friday, and it was just really, really quite amazing to see it unfold. So that's what we're keeping an eye on right now. And as all the charts that I posted today, show you why they technically looks pretty good. It has nothing to do with the fundamentals, but these are the technical spots that we hit a real key low on Friday in all of these things. And so far we've held that low. We tested it once earlier today, and the market is holding up, relatively well, but it's still, early in the day. But going below Friday's low is not going to be a very good thing. And what we'll be watching is for a 3-day rally. So when we have our show coming on Wednesday, we should have a pretty good idea of where we stand, if we're in the midst of the rally or we're starting another leg down. This is the main thing that we have to be looking at. When we come up to the next part of the show, well, we'll try to start in this section, but I wanted to tell you a story. Mark Douglas, who wrote the book Trading in the Zone and the Disciplined Trader, is one of my best friends, and I see him all the time. And I play in poker tournaments on Mondays, or the first Saturday of the month and the last Saturday of the month up in Scottsdale, Arizona. There's about anywhere from 400 to 600 players. They have to pay anywhere from $125 to $250 to enter the tournament, and you get down to the last 10% of the people get paid. And I've done very well. Last month I finished second, which was good, and I've been in the money well better than 50% of the time. But on the Saturday's game, I had a 5 or 6 of diamonds, which is not a very good hand, but there was nobody else in the pot but 2 other people, and so I played the 5 or 6 of diamond. I had a lot of chips because I had been playing for 3 hours and playing well, and I accumulated a lot of chips. And so I had a 5 or 6 of diamonds, and the flop came out 4, 7, 8 of diamonds, which was a straight flush. And it's absolute unbeatable hand. And as luck would have it, 2 players had some diamonds, and one had a set of 6s, and it didn't make any difference what they had because I had an unbeatable hand, and I knocked 2 players out. And right after that happened, I was thinking, I have just reinforced negative behavior. I never should have played this hand, and yet I was rewarded for playing this hand. Sure enough, about an hour and a half later, when I still had quite a few chips, but I was playing against a couple of very good players, and they had 5 people in the pot, and I was the last person to act, and I had an 8-4, and the flop came 8-4-4, which means I had a full house, 4s full of 8s, which is an incredibly good hand. The problem was one of the other players had a pair of 8s, so unless I caught a 4, I was dead. And sure enough, I didn't get a 4. And so my negative behavior playing the 5-6 and then the 8-4 cost me a great deal, because then I was damaged because I had very little chips left. I was forced to play a marginal hand, and it knocked me out. So it cost me a great deal by playing that hand and getting the good cards and then losing. And this is what happens in trading. If you make a mistake in trading and you get paid for it, that's not a good thing, folks. You might think that's good, but in fact it isn't. So remember that. I'm trying to get Mark Douglas to agree to be a regular guest on my show here, much like I used with Rich Anderson. We're going to try to get him on at least twice a month, maybe more if I can, because he's got some incredible information that he can impart to us about the psychology of trading. And the psychology of trading is where 85% of where it happens. It's how you prepare yourself mentally for these trades, and how you accept responsibility for your trades and learn to do everything for yourself and not listen to anybody else. That's the whole key. And that's what we try to do here at Tiger TV, is to give you a great deal of information so you can put some of this together for yourself, to build a trading plan that helps you be successful. Okay, we've got to take a little break here. We'll be right back after the market keeps going higher.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back, folks, and we have a call from Thailand. Mike, are you there?
Yeah, Larry. Can you hear me?
It's just like you were standing right next to me, Mike.
All right, that's fantastic. All right.
Sawadee Ka. How are you today?
Okay, Sawadee. And you?
Everything's good. What can I do for you, my friend?
Okay. I've been trying to do some research on the Bradley model, and I tried looking it up on Wikipedia. I learned a little, but there is nothing specific and detailed. Now, just to let you know, when it comes to these this astronomy and these astronomical projections and things, I'm pretty in tune with it. I understand a lot about it. About orbits and things like that lining up. Where can I go? Where can I find out about the formula Bradley uses for this model? Where can I do that? So one could actually
drop me an email, Mike. Drop me an email. You have my email address, and Larry Pesavento at gmail.com. And if you'll drop me that, I'll show you how to get to it very easily. It'll be no problem at all. But send me an email to that effect, and I will send it off to you. The model itself is very good. the reason why it's so good is it can be done, years in advance. And when you plot the stock market over, it does a tremendous job of, showing what the trends are. Unfortunately, it has these inversions that no one's been able to figure out. But the trading dates themselves are very important. And then the time when the market locks on to a trend that can last anywhere from a few weeks to 5 or 6 months is very important. And I think that's where we stand right now, is that we locked on July 3rd, and it looks like we're going to be going down into early September. Then we have a rally into, I think, a 4 or 5 weeks rally, and then it gets really nasty, starting in October, going all the way down into December. So that's what it's saying, but we have to wait till we get out into the future to see what it's doing at that time. But right now, it looks rather ominous.
Yeah, right. I watch your charts, and unfortunately, the connection here. I missed about 10 minutes of your show today because one thing I really miss about living back in the States, probably the only thing I miss, is the internet connection, because I cut in and out, and
sure.
Anyway, it's a bummer. But I was reading about the Bradley model, and they said something about it only predicts turning points. It doesn't predict whether the market goes up or down. It just predicts turning points.
No, that's not true. It does predict turning points, of course, but from that turning point, it predicts what the trend should be to the next trading point. That's really what it's designed to do. It's an energy point, an inflection point, where the energy of the markets either turn positive or negative. What Bradley did was he used the work of a man named Burr out of Yale University. That he was an astrophysicist that gave the valence, whether it's positive or negative, to these planets. That he did that back in the 20s, and it's still the standard that they use. Mars is a negative valence. Mercury has a positive valence. Venus has a positive valence. And so when you add these together, that tells you what the power of the move is, and then it goes from there. What's interesting, though, about the Bradley model, it only works on the New York Stock Exchange and the Dow Jones and stuff like that. It doesn't work on the Nikkei. It doesn't work on the DAX or anything like that. It's only the U.S., and that's just a characteristic of it. And believe me, I've looked at 135 years of this thing, and I know that it's 75% accurate. And, you statistically look at it, it'll prove to you that, yes, it does do a great job. Now, the interpretation of it is, where you get into some trouble. But the Bradley model itself is awfully good for short-term trading dates, and also for the trend of what's going to be happening in the next month or two.
Yeah, outside of the Bradley model, I'm so bearish. I know you're listening to you for years now. I know you're very bearish. I'm probably more bearish than you are.
You're the only one, Mike.
Yeah, but that being said, I know this is going to sound really odd. I still don't think we've seen the high yet in this. I was expecting more of a bounce today so far. It didn't. It's not happening so far. And what really I have my eyes on now are the utilities. That's telling me, if we close at these levels just in the utilities, and you brought up some salient points, some good points about the NASDAQ, how that's holding its ground, and that's all I can say right now. If you can respond to that.
I agree with you. The utilities is at such a critical level that if it doesn't hold this level, we stopped right at a real key 786 level on Friday. We made a Gartley pattern. We've had a real strong move down. since the last 7 or 8 days of July. But all of these are so critical. I mean, I went through the Dow Jones Industrial, the transportations, the Russell IWM, the VIX, New York Stock Exchange Index, the banking index, the NASDAQ, the utility index, and the DAX, all of them. I mean, you're talking about, a huge amount of financial stuff that has stopped right where it should have on Friday. And if this is really a good bottom like we made on April the 15th, this thing should come out of here like a Ferrari, not like a 1946 pickup truck or something like this. Thing should really have a lot of power coming out of here. So we really need to get moving here in stocks to the upside. Otherwise, it's going to roll over. And remember, fear is a greater emotion than greed, so that if it does start down, it can get rather nasty. We've only been down, I think, 300 points has been our biggest day so far in the Dow, I believe. Well, if you multiply that times 1.618, that's going to give you 500. So we're going to see a day here real shortly, sometime in August or maybe September, where the Dow is going to be down 500 or more. And then you multiply that one times 1.618, and then you'll see a day of 800 or more, which will challenge the biggest day we ever had, which was in 2008 when the market was down 777. I believe really strongly that we will break that 777 number without any trouble, because we're coming from a level of almost 17,000. So 777 into 17,000 is 4%. It's not a big deal.
Yeah, but Larry, wasn't there a bigger point drop? Wasn't there percentage drop, rather?
Yes, percentage, of course, yeah. That biggest percentage day was...
that was in 1987. That still holds the record for the biggest percentage.
87 was the record, right? Yeah. No question, yeah.
So I'm thinking, we're still going to go higher. We're still going to make a new high, and but October is just like what you said before. That's what I have my eye on. I think everything's going to come unglued come September, October, and I think this thing, and I know you already agree, and it's depressing thinking about it.
Well, I don't agree with the new high part, my friend. I know you don't.
Yeah. I know you don't, but I think that after we do turn down, and I think I think we have a window still left. It's going to be September, October, and anyway, I think it's going to be at least twice as bad as 2008, and it's kind of depressing, like I say. But I have one more thing. You can respond to that. I just have one more thing to mention after that, if you have time.
Go right ahead, Mike.
I did a lot of work last weekend. I've really been getting back in the tune with things here. I've been neglecting things for a couple of years. Anyway, a lot of my work I just backed off for a while because I lost a lot of money and stuff. My trading has been doing fine. It's been doing okay this year. But what I noticed, it's the June 3rd or June 5th, these lows, and these markets seem that they can't stick below that low. And the Russell 2000, we're trading below those. And we've closed below those June 3rd and June, 4th and 5th lows. But the IWM, okay, we're still not closing below those levels. And I also noticed on a lot of these bearish ETFs, the ETFs that go short,
yes,
they haven't been able to better. So now we're talking about the inverse. They have not been able to better those June 3rd highs. Am I making myself clear there? Am I explaining that enough? Do you understand what I'm saying there?
Yes, yeah, absolutely. But that's a that's a much smaller index. That's only 2,000 of small cap stocks. I think you have to look at the New York Stock Exchange Index, to see that. That's really what what I think is important.
But the reason why I'm looking at the Russell 2000 is this is what's been spearheading the move down. Would you read that?
Yeah, well, everything's been coming down, but because it's so small, it can drop a lot faster. Just because when it went up, it can go a lot faster. Same is true of the IBB, and we also made a critical low in that on Friday. I mean, that Friday's low, just circle that puppy, because if it goes below Friday's low, it's going to be hard to find some people going to be coming in to want to be bullish here, because it's going to really do some damage. And if we ever go below the February low, you like I mentioned before, they're going to turn the lights out on Broad and Wall, because it's going to really be bearish. And then you've really got to, once we broke 16,800, Basil Chapman, God bless him, talked about that for, several weeks. But once we went below 16,800, it was over. And if you look at the New York Stock Exchange stock, when it broke that level, which had held for well over a month, the market just cascaded down, and now that's major resistance. And if we can't rally into that resistance this week, we're going to be a lot lower by Friday than where we are right now.
Yeah, I totally agree. And it's like you talked about those Fridays. We got to hold those lows and even break below them more. Right now, we're getting a dead cat bounce at best. So, yeah, I was thinking the same thing, all weekend. This has been on my mind. Like, this thing really has to bounce here, and we're not seeing that bounce. And I really expected and Basil really likes to look at that VIX. And now what's happening, looking at the VIX, I'm just updating it right now. That thing, let me see here. I just updated the last.
It's just holding down a little bit on the day, which is nothing really happening. The market's just digesting. The problem is, Mike, is it's not coming out of here. This thing should, if it's really good, it should have had ethyl in the gas tanks of a Ferrari, and away it goes. And it's coming off like a 1946 Ford truck that needs a valve job, because this thing is not moving yet. That doesn't mean it's not going to by the end of the day. We need the Dow or the S&P 500. We need the S&P 500 futures to get above 1935. That's 13 points from where they are right now. If they can do that, the Dow would be up over 100 and some points, and that would, give the bulls some confidence that that Friday low is, in fact, really valued. They're not looking at it the way we look at it, because we're looking at it from a technician standpoint. They're looking at it from a fundamental standpoint of whatever they happen to look at. But technically, it's just huge. I mean, when I went through my work this weekend and I saw that low on Friday, I said, oh, my God. I said, this has got to be, when I looked at the VIX and all of these numbers, I said, oh, wow. I said, this is the moment of truth. I said, if this can't hold here, it's going to get really bad. So that's the key, is to watch that Friday low, because we've had these little bounces starting Friday through Sunday and then today, and the market hasn't really, really taken off. And that's not a good sign. It's still early, but it's still not a good sign, in my opinion.
Yeah, I got stopped out. I covered a third of my shorts this morning.
Okay, Mike, we got to take a little break here, buddy. Listen, thanks for calling in. I really appreciate it.
Thanks a lot for your time, Larry. Take care.
You bet. May God bless you. Drop that email to me, and I'll take care of it for you.
All right, thanks. Bye-bye.
Yeah, bye-bye.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN.
Okay, we're back, folks, and we were chatting about the stock market with Mike from Thailand. Haven't heard from him in quite a while. What we'll do is I want to review, I've had several requests during the breaks to review all the things that I talked about in the first few minutes of the show today, because they are so very, very important. We are at levels that we haven't been at in a very, very long time, and at least on the downside, we've hit such major, major support. So what I'd like to do now is to run through those. The Dow Jones Industrial Average, as of Friday's low, was making a 382 retracement, a 61% retracement, and a 786 retracement, all of them coming together at the same time on Friday's low. That's very important. The Dow Jones Transportation, trading right where it is now at the 786 retracement of the lows made just last month. The same thing is true as the IWM, the small cap, is trading at the 786. The banking index, the BKK, has made a 61% retracement. At that time, it's also making a Gartley pattern. The New York Stock Exchange Index is at the 786 retracement of the May lows. So that's important. The S&P Cash. The S&P Cash has made a 61% retracement of the May low, and it's made a 382 retracement of the low that we made in April. So these are all of the things that come together at this really key time that we had on Friday. And we've tested the lows in the Dow and the S&P. We've held them so far. We've been able to rally a little bit, about 9 points in the S&P, but still early. But we need to get that S&P above 1935 in the futures, and then it would tell us that, yes, we are going to go down a lot more, and then we will see if that is going to happen. We are just a critical level. The VIX index made the 61% retracement. I mentioned that one. It stopped exactly where it should have. It moved 60% in 5 days. That's the first sign that the trumpet has said, hey, look, this train might be getting ready to leave the station. And just remember, you don't want to be the boiling frog, folks. The water is still warm in the pot, but if it starts getting warmer, get out, because this thing could really melt down. And fear is a greater emotion than greed. Markets come down a lot faster than they go up. We all know that. And we haven't really had anything nasty happen to this move since our flash crash back in May of 2011, where the Dow dropped 1,000 points in a matter of about 15 or 20 minutes, only to get it all back in a matter of a few minutes also. So we're going to see some of that with this high frequency trading that we have now. God knows what could happen. And if liquidity starts to dry up, we could really run into a situation where we run into a very, very nasty market, and I don't want you folks to experience that. So remember that that Friday low in the Dow and the S&P and the NASDAQ and the New York Stock Exchange Index are just very, very important. And if we go below that, that's telling us that this market has basically been rallying for part of the day Friday and all day today and still not going anywhere. That's a very negative sign. So those are the things you want to keep in mind, while you're looking at your portfolios and stuff. It's still got a really good chance here to turn, and I don't think it's going to make new highs because of the way that it came down. And not only that, but, we had all these patterns that were completing, and they completed at different times. The Dow completed on July the 3rd. Then we made a higher high in the S&P. We made a higher high in the NASDAQ, but we didn't make a higher high in the New York Stock Exchange Index. So all of those things, those divergences, are telling us this is the same type of scenario we had in March of 2000. So live every day in an attitude of gratitude and do something nice for someone who has a lot less than you today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.